Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq 100 performance as investor confidence in tech appears to be returning. Shawn, it's great to have you with us as always, and it certainly seems like tech investors are coming back.
Yeah, and that's something we were looking to see. At what point would investors come back in if we started to see some of those large components in the NASDAQ 100, if they were able to hold some of those key technical levels. So it looks like they were able to. We discussed that on the show last week. Jill was keeping an eye on some of those key levels. It looks like by and large they will. You're starting to have some investor confidence return in the market. They're coming back into some of those names that sold off pretty heavily. And I think one thing to think about now is we're starting to assess what sort of upside move we can get out of equities. I think right now, if you want to have a market that isn't as prone to these sharp pullbacks, I think more broad-based participation would be a key. And that really, it's for any index that you're looking at. You need to have the index as a whole, a lot of the components moving higher, not just the index overall getting pulled higher by some of these massive names. And that was actually, I think, a little bit of why you saw that sudden snapback. And if I looked at the NASDAQ 100, which is market cap weighted, and then I looked at the NASDAQ equal weight, where each individual component has the same effect on the overall index, and you actually saw the market cap weighted component really take off higher, and the spread between those two widen out pretty significantly, and the correlation between the two also started to break down. So it went from nearly zero, where it was pretty much the NASDAQ and the handful of those companies that were really doing well were pulling everything higher. The equal weight didn't really go anywhere. And when you do start to see that, the risk is if you start to see all of a sudden a correction of that correlation, that can lead to sharp pullbacks, and that's what we saw. So now looking forward, I think the market knows to keep an eye on not just the NASDAQ 100, but also looking at the equal weight just to see what kind of breadth we're getting in terms of a rally higher. And we had days like yesterday where I think it was encouraging to see some of those the broad-based participation that we were looking for actually play out on the screens, and we'll want to see that continue moving forward.
Yeah, it's really interesting what you say about equal weight. And another conversation that we're having around the NASDAQ 100 is isolating cloud stocks, isolating internet stocks, and looking at that performance relative to the NASDAQ 100, which in fact, it does tend to outperform, but you don't have this extreme concentration to one end or the other. So it seems as if looking at it from a more equal weight perspective is really that narrative that you're starting to hear right now because of that concentration risk. So Shawn, while we have you here for another couple of minutes, what else are you looking at in addition to the market? Of course, we have COVID-19, we have the election, which is really going to dominate, the news cycle over the next few weeks. But it seems like there are a number of volatility factors out there that still exist, and we continue to have these corrections that you correct and recover within a few days of itself.
Yeah, and I think a lot of that is really just going to be general perceptions by the investing public. I'm actually this week really going to be focused in on the Fed, because they always say when they start to get more towards the zero lower bound, they sort of have to look at other policy tools if they want to make some sort of an impact or have some sort of an effect on monetary policy and what's going on with financial markets. So at the Fed this week, when you've got the effective federal funds rate down at about 11 basis points, they really can't do too much more there. I think they might actually start looking elsewhere, and that could be looking at what they're doing with interest on excess reserves, what they're doing with asset purchases. I think you're going to get some interesting information from the Fed on maybe some additional programs or some of the other policy tools they have at their disposal that they may start utilizing a little bit more. And then also looking at expectations for inflation is something I actually think could be very interesting to look at. We've gotten some subtle hints that they are starting to evolve in terms of how they approach policy and what their policy goals are around inflation. So it'll be interesting if now that we've sort of have that out there in the public sphere, it's been acknowledged, if we start to see a little bit of a different tone from members of the FOMC coming out of this meeting. So certainly look at the projections, and more importantly, the projections for inflation in the long run from the FOMC meeting this week. I think that can be another one that could be a pretty significant driver of volatility, and not just in the interest rate markets itself, but I think some of that could bleed over into the equity markets.
No, sure, of course. I mean, that's kind of the conversation we've been having certainly over the past 6 months, where valuations have been so inflated because of this injection of liquidity into the
Mhm.
system. So it's just, Shawn, it's just really quite incredible the way 2020 continues to play out. And we have this confluence of a number of volatility events. And so my final question to you is then, so really what we've seen through 2020 are these moves, 3%, 5% to the up or downside. And even if it is to the upside, it still lends to the volatility that we're seeing take place. Do you think that kind of action is going to play out for the remainder of the year?
I would expect that to play out for the remainder of the year. And there's a lot of things that are going to be driving that. I certainly think, when we get into November, there's probably going to be some surprises and still some uncertainty if we know who, we actually are declaring and signed, sealed, delivering as the winner of the election
Right.
on election day. I'll be surprised. So I think that can be a big driver of volatility the longer that drags out. But I do think if you can actually get some real progress in terms of vaccinations, treatments, that would be where you start to reopen the economy and you get more, like I said, broad-based participation, especially from some of the more cyclical type sectors. I think that can really pull down that VIX reading, which is still up around 25, and maybe get us to a more smooth glide path higher. And I think that would be very beneficial for the markets, because that would probably entail broad-based participation, like we said, from a lot of the sectors, not just some of the tech sectors that really benefit from us staying at home, or if we're going back to work, we're probably going to be using tech a lot more in the future. But looking at cyclicals, I think will definitely be the place to watch going into the fall.
All right, Shawn, great stuff. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.